A warm welcome to everyone to this periodic dialogue. Last few months in the markets have kind of spelled a phase of material uncertainty, if not volatility. I will not dismiss away many of the factors underlying as irrelevant. They certainly are important ones at a macro level, some of them global macro and others are India specific macro factors. So, oil rise and significant rise there certainly is not a positive news for India, affecting our twin deficit issue and in turn feeding into the inflation. There is also concern about the rising tensions with the global trade war which is brewing around, and it's difficult to figure out how it is all going to unravel. There is also a concern with the tightening of the interest rates by US federal authority and what kind of impact it would have in terms of the foreign flows into Indian markets. And recent evidence does suggest that there has been a fair amount of an outflow from India back to the foreign investors. As far as the Indian situation is concerned, all of these macro factors kind of get into the worry on the interest rates, whether there is going to be tightening of the credit and in turn while growth is beginning to get into a healthy phase, whether interest rate rise may be warranted and that may dampen the growth that we have just a high growth phase that we have just entered into. I would say these concerns are important, they are legitimate, but I would prefer to see opportunities rather than worries. Most people in the market at virtually most points of time are really engaged into worrying about something or the other. I am not making any light of it, but I would say I prefer to see actually important opportunities which are right now visible rather than worrying about some of the concerns that I narrated. So, coming from the effect of significant reforms that have occurred, primarily led by GST demonetization earlier, as well as the Insolvency and Bankruptcy Act enactment and the subsequent corporate developments, not to forget the Real Estate Regulation Act and the important impact beginning to cast its shadow over that very vital sector. All of these major changes and very important ones have occurred, and I think though it is a bit early to talk about the first quarter, that is the April to June 2018 quarter corporate performance, but early indications are very positive. Of course, there is a kind of a favorable base effect of the last year because it emanated from just before the enactment of the GST, and to that extent there was some positive and in many cases adverse impact on the results of the firms last year. So, there is a favorable base effect. There are also challenges of Ind AS accounting standard implementation, and therefore the changes in the numbers which have emanated and all of these. But even after accounting for all of these changes, the early results indicate that the corporate India is actually beginning to do very well. On the consumption side, the results that we have seen so far have witnessed very healthy double digit kind of growth. Early indications also are that the rural India is actually doing quite well. There is full picture not as yet on the monsoon But whatever we have seen so far, it looks to be a reasonable picture, and therefore agriculture is likely to behave in a very normal and healthy way for the current year. So, net upshot of all of this is that after digesting several important and some of the disruptive economic reforms that this country has undergone, and after undergoing some of the important global macro issues, the corporate India is beginning to be in a very healthy space, and from all indications seem to show that economy is on actually high growth mode. Whether you go by the results of automobile firms, whether in two-wheelers, whether you see it in three-wheelers, whether you see it in cars or the commercial vehicles, the air density that you are witnessing, rising hotel occupancy that we are witnessing, also the important indicator in terms of healthy double digit growth in the credit advances by the banks, even after kind of absorbing some of the major shocks on the on the non-performing assets over last 1 year. Uh, After so many significant issues that have been gone through, it is quite clear that corporate India is a very resilient one in a healthy way. The working capital investments actually seem to be coming down. Therefore, the businesses are getting more efficient. It's also getting reflected in the steady but very clear improvement in the capital efficiency or the return on capital employed. The early results seem to indicate that the profits of the corporate India seem to be expanded by close to 25%. The top line also seems to have expanded by closer to 22 to 25% so far. And admittedly, even after taking into the benign effect of the base quarter, this does spell a very, very healthy picture ahead. So, I would say that rather than really worrying about many of the major factors, and it's not that I am dismissing away of those macro factors, but in the market more often than not people make it their business to get worried about many concerns, while I think actually there are major opportunities, and economy, I would dare say, probably is right now poised at a stage where not for a short period but for a material long period, with the structural reforms having already been undertaken, is on a path of sustained high, maybe 7.5%, 8% kind of a growth rate for a length of time. All that should spell great news for the corporate sector, and I think very importantly, the quality, transparent, straightforward businesses are doing wonderfully well across the sectors where we are seeing those businesses are flourishing. They are gaining from the natural growth, plus they are taking away growth from some of the informal entities in these segments. With the rising capital efficiency, improving growth rate, and though there is modest improvement in the credit in the cost of interest recently due to the uptick in the inflation, I do believe over a period of time even that will get moderated out. Therefore, a modest cost of capital, rising profits and improving capital efficiency in the backdrop of very clear trend towards formalization of economy and financialization, I think we are on a fantastic wicket from a long term perspective in terms of what it all means in investing. Investing at our end continues to remain bottom up stock specific rather than really getting swung by the macro factors. While macro factors have their own importance, ultimately investing is bottom up stock picking, and at an individual business level we are finding outstanding businesses growing at a material pace, enjoying superb capital efficiency run by top notch managements, and many of these businesses are available at reasonable and fair prices and not really excessive ones. And all that means we just need patience, belief about these businesses and buy them into at fair prices and remain there. Rest will be done by those businesses in terms of the returns. We need to display just the right patience. Thank you.